Hi folks, I'm Mitch Weiss.
I'm Peggy Reed, and we're back with podcast number 5, brought to you by the Pain in the Assets course and Rutgers Arts Online.
So we've covered a lot of ground in the first 4 episodes, renegotiating your loans in number 1, prioritizing problems and concerns in number 2, managing student loan debt in number 3, and freelance work in number 4. All this in an effort to help you deal with all that's happening right now and what lies ahead too. Which brings us to today's podcast, a budgeting methodology that we touched upon when we talked about student loans. It's called the 25% strategy. We cover it in the personal finance half of the course, and it's a ridiculously easy concept to grasp.
In fact, there isn't a week that goes by that one or more of our students doesn't mention it in an assignment that has nothing to do with budgeting per se, but where the application makes sense. Take the last podcast, for instance, in which we talked about taking on freelance work to supplement your income. Well, the reason why our students are so motivated to do that is because they know that the extra money will come in handy, especially with all that's going on today.
Household budgeting is a zero-sum game. There are only so many dollars to go around, and when that's spent, what do?
Pull from a savings account if you have one, which is kind of like burning the furniture to stay warm, or borrowing the cash you need, which will only add to your troubles later when the loan comes due.
Enter the 25% strategy, where your before-tax salary is divided into 4 equal categories: taxes, housing, debt, and living expenses.
The taxes component is what it is. There's little that you can do to reduce this obligation, especially when you're first starting out. So view this first 25% as locked in place. Housing, debt, and living expenses are another matter.
Let's say you know that your first year earnings will be $40,000. 1/4 of that is $10,000. Now, divide that $10,000 by 12 months and you get $833.33 per month. That means you can afford to pay $833 per month in rent and still live within the 25% strategy. But that may not be possible where you plan on living, in which case you may need to share your space with someone.
The next category touches on the topic we discussed in podcast number 3, student loans. Applying the same math as we just did for housing, if you earn $40,000, you'll be able to afford $833 a month in debt payments. But what if your student loans run $400 a month, your auto loan or lease payments are $200, and you've got $15,000 worth of credit card debt at 24%, which will cost $300 a month just to cover the interest? That's $900 compared to an $833 budget, a $67 shortfall in the debt category.
And then there's the living expense category, a catch-all for what it costs to feed, clothe, clean, insure, entertain, communicate, and travel each and every month, which should also include the liquidity that we mentioned in the very first podcast, savings that are enough to cover 6 months worth of expenses to get you through a tough time. So how do you deal with a category that blows up your budget?
By reconfiguring what's left. Suppose you can rent a place that's large enough for 2 people for $1,500 a month. That's $1,500 divided by 2 equals $750 versus an $833 budget. You just picked up $83 from the housing category, which you can now use to cover the $67 shortfall in the debt category.
Get the picture? By organizing your expenses into these 4 categories, you're better able to identify where the problems are and the solutions that can be found.
Much like what we talked about in podcast number 2, when we explained how to take a risk management approach to dealing with the challenges that you face.
And one more thing, if you find yourself running short each month and can't figure out why that's the case, start a journal of your living expenses. Make a note of every single nickel and dime you spend for 30 days and tally it up. I used to assign this project to the students in my personal financial management course years ago, and it never failed to elicit the same response semester after semester. Oh my God, I had no idea I was spending so much on lattes. Well, that does it for the series. We hope you've enjoyed these podcasts and found the information that we've shared helpful. You're welcome to email us with questions or comments.
Please take care of yourselves and those closest to you. Stay safe and be well.